Welcome to Master Media's channel, where we will be discussing how Bitcoin applies to our everyday real lives, not just in a technical way, but as I said, in real use case scenarios. So today we're going to be interviewing Kyle Chasse, our CEO and founder here at Master Ventures. He's a founder of several companies prior to starting Master Ventures. And as far as I understand, and he'll be sharing today, and we'll be asking him these key questions, as soon as he discovered crypto and blockchain, he went all in. He invested all of his assets, and I think that says so much about its value. So without further ado, I just want to ask you a few questions. When you first discovered crypto, could you just explain, like, why did you go all in? Like, what value did you see? Like, why would you commit so much and go all in?
Sure. So, it just made sense from a lot of different perspectives, and I read the white paper, Satoshi white paper, and it made sense from an investment point of view, but also from a fundamental point of view. So, I knew that all Bitcoin had to do was survive, and it would thrive. It was clearly something that the world needed, clearly something that the world wanted, and was something that could benefit the world. So, I knew that it just by the fact that it's a deflationary currency, and we saw that as of last night, the halving kicked in, and so I knew that over time the amount of Bitcoin would be capped out, and there wouldn't be any more available. So I knew there's an extremely finite supply. And when you have something, simple economics is supply and demand, right? And as demand increases, which we're seeing a massive amount of demand increasing right now, institutions, banks, and things like that all over the world, we have a decreasing supply. So simple economics tells us that's what will increase price. So from an investment perspective, it was a no-brainer. And then I also got really captivated by the potential of what it could do. I thought it was going to be very disruptive. Like I said, it was probably needed, and it was something that allowed people to transact value directly through each other without having a middleman in between, to censor things. I personally have felt the censorship of transacting value before. I've been banned from Western Union, PayPal, Green Dot Money Pack, different banks, things like that. So. It's always frustrating, and it's a very slow process trying to send value, and so I just saw so many different benefits from it, and I mean I could go on for days, but it just made a lot of sense.
Okay, great. Thank you for that explanation. I know many that are watching are already in crypto, but I would like to speak specifically to us, and I include myself, that maybe don't know when you hear Bitcoin, like, what is Bitcoin? Like, I understand it's a digital money, correct?
Mm-hmm.
Which is where the world is moving, right? If we think about it, everything is digital. A few years ago, people thought the internet was crazy, but now it's like breathing air, So for those that don't know, they hear Bitcoin, like, what is Bitcoin? Like, I just answered that question in many ways, but how does it differ from just e-money? Like, what is the difference? Because anything can be digital, but what is the significance of Bitcoin? Like, what is it? You said it's censorship resistant, and you talk about how there's no middleman, right? So that leads me and any smart, intelligent person to understand, okay, it's something that can clearly be sent, between two people. But for those that want a clear picture, that have not been in crypto, like, what is Bitcoin? How does it differ just from, like, a digital money?
Yeah. So up until Bitcoin was around, there was no way to transact value, like send money from point A to point B, without there being a trusted third party.
Like who?
Like PayPal, like a bank, like Venmo, like whatever. So, and this is because of the custody problem, or the double spend problem. So if you create like a digital file on your computer that says it's $100, and I send that to you, how does anybody know that I didn't make a copy of that $100 digital file and then also send it to other people? So this is why we needed a third party to keep track of the ledger, to make sure that people weren't, basically double spending or triple spending, basically reproducing this digital value and then sending it to many people. So we've relied on third parties to keep track of things for us. And so what Bitcoin did is it enabled a trustless or a decentralized version where instead of a trusted third party keeping track of the ledger, everybody who runs a node, which is basically a copy of a ledger, keeps track of it for everybody else. So people volunteer around the world and earn Bitcoin by running nodes or copies of the ledger. And every time I send you a transaction, there's a small network fee attached to it, and that's rewarded to the miners or the node operators, the people who keep track of the ledgers for us. So, and also it's when I say censorship resistant, I mean that nobody can tell me that I can't send money to you, and there's nobody that can stop that from happening. So a perfect example, and one of the things that got me really interested, was the whole WikiLeaks thing. So back in 2013 it was, WikiLeaks, from Julian Assange, started a nonprofit that didn't have a lot of money, started leaking a bunch of embarrassing documents about the US government, and the government forced a bunch of money transmitters like PayPal, Visa, MasterCard, American Express, banks, everything to stop allowing donations to WikiLeaks. So they had no way to accept money as a nonprofit to continue their operations, and so they started accepting Bitcoin, and then money could come in again, and they were allowed to continue doing their operations. So this is what makes it significantly different than any other digital money or e-money.
So when you say that, so basically it's a way of guaranteeing the value and guaranteeing that you can send it. That makes sense. But what exactly makes it true? Like you say, a bunch of people all over the world verify through these different nodes. They verify the transactions. But what within those nodes is happening that verifies its validity?
Okay, so it's like okay, let's say most people can understand like accounting software like QuickBooks or something, which keeps a ledger from a business of all the money in and out, debits and credits, and what happens is, so like let's say that I have my own QuickBooks running, and it knows that I have $100 in my account. So if I send you $50, the QuickBook entry would be -50 minus $50 spent to you, and then my ledger would show me that I have $50 balance. But if Joe Smith doesn't know that I only have, if he can't see my ledger, and I tell him that I'm going to send him $100, but I only have 50, he doesn't know that, he doesn't see my ledger, so he doesn't know that I don't actually have the $100 to send him. But if my ledger was not only public, so he could see it, but also every time when I sent you that $50 originally, not only did it get deducted from my ledger, but 1,000 other people in the world that were also seeing the exact same ledger in real time, and they also saw that my $50 was taken out of it. And then if I tried to send Joe $100, all the other ledgers, even if I manipulated mine and went back in mine and said, try to add, add some value to it, all the other ledgers would say, no, like, how do you get that value? It doesn't come from anywhere. Someone actually needs to send you some more value before you can send out more value. So it's basically just a copy of a ledger that's in real time broadcast to all of the nodes, which are just keeping copies of a QuickBooks, essentially, a ledger. And that way it knows, and you can't counterfeit Bitcoin. You can't create new ones out of nowhere. So in order for you to send more, you have to receive more in a way, and you have to put it in your wallet, And so I think that answers your question. I'm not sure.
It does. I would like to do a follow-up video where we explain and we get into the algorithm and how that validates and verifies each transaction, because I think that's really valuable education. I know I found it very valuable. So a moment ago you mentioned that the halving just happened. Okay, first could you explain what is the halving and what is its significance to us, both to the OG or the senior crypto investor, but also to the average person, like that is not aware. Like, how does this impact their lives?
Yeah. So on the day that Bitcoin was created and Satoshi, who invented Bitcoin, mined the first Bitcoin block, which means that so when all of these transactions are happening, they are input into a block, and this is a block of data, transaction information, and approximately every 10 minutes, this block is closed forever, and it's time-stamped, and it's recorded into this history of all the blockchain transactions. This is why it's called a blockchain, because after the block gets recorded, another one opens up, all the transactions go in that, it's locked, recorded, time-stamped, and so on, so on, so on. So in order for that block to be closed and time-stamped, it needs to have basically a very complex math problem solved, that nobody can see the actual math problem until after it's solved. So miners are trying to guess the answer to this problem, and it's usually a very long answer, and they're just guessing, at hundreds of millions of transactions or guesses per second, or now I think there's even quadrillions of transactions per second, like today. But anyway, when somebody guesses the correct answer to the math problem, then the problem is exposed, so people can see what it was. Everybody else can verify that was the correct answer, and whoever guessed it correctly gets what's called the block reward. So for solving this block, or the math problem to this block, the miner gets a reward. And when Bitcoin was first created, it was 50 Bitcoins, and a block is supposed to happen on average every 10 minutes. So every 10 minutes, 50 Bitcoins were mined. They were introduced to the world. The miner got to keep those Bitcoins as a reward for participating in the network, for guessing, for trying to guess these things. And this is how the security of the Bitcoin blockchain works. So because it's a deflationary currency, Satoshi created what's called a halving. And so approximately every 4 years, that reward gets cut in half. It goes from 50 Bitcoin to 25 Bitcoin. And where we were yesterday was 12.5 Bitcoin, and now today we're at 6.75 Bitcoin every 10 minutes. And then in 4 more years we'll be at 3 and a third approximately, and then after that, 1.15 whatever, and then so on until approximately 2140, when there's going to be no more Bitcoin ever mined. And and so the halving is significant because it's just a reminder, essentially, that one day there won't be any more Bitcoin available for people to mine. And also, unlike what we're seeing with fiat or dollars right now, where they're printing trillions of them every by like, or just.
Let me just stop you one second. When you say fiat, you mean
dollars. Government issued money, so dollars, Japanese yen, Mexican peso, Canadian dollar, Russian ruble. These are all fiat currencies issued by governments. So, where they can just print unlimited amounts with no repercussions or anything like that, that's actually inflating the supply of money, right? And so when you have, again, simple economics, supply versus demand. So if the supply of something is increasing and demand stays the same, that means each one of those assets or those things are worth less, right? And so it's the opposite of Bitcoin, where Bitcoin, the supply is decreasing, even though it is increasing now because we are mining but over time, it decreases it eventually when it stops, and the demand increases. Where in dollars or something, we see the supply just keep increasing, and the demand is pretty much staying the same. So it's devaluing a dollar. So I think something like $100 100 years ago is now worth something like $3 today or something like that.
Wow.
Where one Bitcoin 10 years ago was worth pennies, and it's almost $10,000 today. So it's completely the opposite.
Thank you. That makes sense, I think, to many. So just this morning, I was reading about how Peter Schiff and I think many people, have this idea or think or have heard that Bitcoin is a scam. It's not true. What would you say to that? I think first you'd have to start by defining a scam. Like, what is a scam? And then go from there. But what would you say, considering you've been in the space so long, you've seen the market go up and down, up and down? What are your thoughts to that? And what would you tell the public, those listening, that are concerned? I think everybody ultimately wants to secure their financial future. Everybody. And we've all seen how the government is printing, trillions of dollars. And most immediately we're comforted, right? Oh, interest rates are zero. I can get a loan. There's more money. They're sending stimulus checks. But in the long term, according to your explanation, that's only going to ultimately decrease the value of money. And it's going to encourage businesses and business ideas and projects that shouldn't be funded, people that don't know how to manage money, businesses that shouldn't be operating, albeit they are good people, they're not good business people. So while immediately this is, like a Band-Aid or a pacifier to the current situation, in the long term, according to how you're explaining this, it's not a good thing. So back to my original question, and to the point I just made, you could argue that our current currency is a scam. So
Yeah, that's well said.
To those that don't know Bitcoin that well, and like I said, I think we all ultimately, those have children and, have parents to take care of that are not as tech savvy, and even for ourselves, like I just said at the beginning, we're experiencing a digital revolution where in the same way that the internet totally changed the way we live our lives, it impacts every single little thing that we do. Bitcoin and blockchain are the internet 3.0. We are currently living history. We are going into this new world. So for those that care about their financial future, they care about their parents, their kids, and they don't want to get left behind, because that's what's going to happen. Those who don't educate themselves are going to be left behind. It doesn't matter if you're holding real estate. I'd say gold is probably the only other, like safe haven for your money. But even then, there's a limited supply. So while that is a case for gold, holding gold, we encourage that. And maybe real estate, because it's earth, like there's only so many plots of earth, right? So that has an inherent value. But you use fiat, like you said, or currency to purchase it. So if fiat is losing its value, even for those that believe that real estate, is where they want to put their money, or gold, what would you say, once again, to those that are hesitant or on the edge, or just full on believe it's a scam because that's what they've heard and they're not educated?
Well, I think like Peter Schiff,
First, can you tell us who is Peter Schiff?
Yeah, so Peter Schiff is I actually don't really know exactly what he's done. He's a what they call a gold bug. He's someone who just loves gold and believes that gold is the best investment vehicle. And we compared Bitcoin to digital gold. It's actually a better form, in my opinion, than gold. Now, Peter Schiff's his logic to calling Bitcoin a scam or whatever is that he thinks that there's no inherent value to it. Where he thinks that gold can be used in manufacturing or necklaces or whatever, that it has inherent value, and so therefore it makes sense. But why anything has value is because we believe that it has value, right? So people think that, I think some people still think that the US dollar is backed by gold, which that stopped happening a long time ago in the 70s. So the reason that the US dollar has value is because people believe that it has value, and that it's backed by the government, but it's not really. I mean, it doesn't really have any inherent value either. It's just paper. It's really worthless. Now gold does have some inherent value, but it's losing its inherent value. The case for it 15 years ago was that It was used in a lot of different manufacturing and things like that. And now we're finding better ways of conducting electricity and things like that. That was gold was used before. Um, like what is this stuff called? Graphite. Like graphite, for example, is a superior conductor of electricity to gold, for example. So it is becoming the inherent value is becoming less and less. But anyway, so Bitcoin. It has value because we believe it has value, and people that believe it has value because they see what it takes. It actually has what's called proof of work, right? So proof of work is the algorithm in which Bitcoin is created and produced. So it takes work, just like mining gold takes work. Where mining gold, people have to go out, you have to pay people, you have to buy equipment, you have to go out and physically mine it. And then filter it and melt it and sell it. With Bitcoin, people have to spend money on computer equipment for guessing these math problems, and then they have to spend money on electricity to run the computer equipment. And so this is why they're rewarded, because it takes a lot of work to keep the network secure. And the Bitcoin network has a ton of security right now. I mean, I think it takes up more electricity than small countries, which some people say is bad for the environment. But what people also, this argument, this is what Peter Schiff says a lot too, what they don't realize is that Bitcoin inherently has built in a mechanism, because of the halving, things like that, that make it the most efficient miners make the most money. So, to reduce electricity costs is very important to them. And this is why a lot of people are going to renewable energy. They're mining using solar power, water power, wind power, whatever. They're mining in cold places where they don't have to use air conditioners and things like that to keep the mining electricity cool, mining equipment cool. So I think that by now also the argument of it being a scam is something that is less and less of an argument now that we see a lot of major banks and institutions getting involved. Maybe it could have been a case that wasn't so easy to disprove a few years ago, before you had all this worldwide infrastructure set up. But now there's so many different banks and regulations, and it's now been legally classified as like a commodity by the CFTC and an asset by the IRS, and yeah, and who's it? Property by the IRS. So anyway, so it's been legitimized. I think that it's very clear that it has value. It cannot be recreated. It's easily transferable. It's easily you can take it with you easily. You can cross the border in any country where if you can only have $10,000 of cash on you, but you could have a piece of paper in your pocket or a flash drive in your pocket that has $10 million worth of Bitcoin on it, and nobody's going to know. So it's really easy to transfer around from point A to point B. I mean, you don't even have to carry it on you. It's available on the internet anywhere in the world. And it cannot be, in my opinion, it's much better than gold. Also, it's easier to spend because you can divide Bitcoin into 1/1 millionth of a Bitcoin. That's called the Satoshi, is the lowest denomination. So, whereas if you walk around with gold and you need to go buy a sandwich with it, you're not going to be able to just get out like a huge axe or something and just chip off a piece of gold and pay for your sandwich with it. That's not really realistic. But with Bitcoin, it's easy to do that. It's easy to spend 0.00001 Bitcoin and buy yourself a sandwich. Yeah, I mean, I think it's just obvious now that it's like Peter Schiff. I think his thing is he knew about it a long time ago. He didn't believe in it, and now I think he's just bitter that he didn't get involved in it earlier.
That's fair. Thank you.
Mm-hmm.
So, a moment ago, you mentioned that several banks are now buying Bitcoin. Could you list out a few for those that I'm sure are banking with every major bank? If they wanted to buy Bitcoin, where would they buy it?
Sure. So you can't really buy it from most banks right now. But banks are setting up what's called like a custody. So they'll hold it for you. And a lot of the big ones like Fidelity, And then there's like in Germany, I think 6 months ago they announced that there's 40 banks that applied for custody. But some places that people can buy crypto are things like Abra, which I think is an online bank. It's a popular, the Cash App, Jack Dorsey from Twitter has a Cash App. Also, you could do it from Coinbase. You can do it locally if you want to be anonymous about it. You can do it on localbitcoins.com. Yeah, there's a lot of different places you can buy with credit cards on a lot of different exchanges or different services now.
Good, thank you. And then for those that would still like some more validation, they hear this from you. You've been in the industry since 2012, and you gave very good explanations. But for many watching, they don't know you, and that's fair. Who could you list out, like big names of big financial gurus or well-respected financial advisors? I know Robert Kiyosaki, for instance, he believes in Bitcoin, but like who else that many of our viewers are watching that maybe they know or they follow or they've read their books, who else backs Bitcoin?
Yeah, so Robert Kiyosaki is a good one that's more recently been very public about it. Also, you have Chamath, who's I think the CEO of Virgin Galactic. Also a big investor, publicly spoke about it. The other day in my video, I talked about this guy. I think his name's Justin Tudor, something like that. Also a billionaire investor and also just publicly made something. You have big financial institutions, like I said, Fidelity, Van Eck, which manages $50 billion in other people's money. You have NASDAQ's getting involved. New York Stock Exchange, the parent company ICE, is involved. You have, the regulators from Switzerland. Like in Switzerland, they have a place called Crypto Valley or Zug, Switzerland, outside of Zurich. That whole area is getting involved. And as far as publicly, it's someone that, if you're outside of crypto, you probably won't know, but if you do look up Andreas Antonopoulos, you should watch a lot of his stuff. He has the best explanations of things like that, and someone I really admire and look up to, and I think is great education for everybody.
Good, thank you. I think I also saw last night that Kanye West backs Bitcoin. I forget his name, but from Shark Tank, I know they all back Bitcoin. So I think that's very helpful, and it validates the validity, once again, of Bitcoin once that these big names that we respect, that they back it.
If you're talking to most people, even Kim Kardashian backs Bitcoin.
Hey. I think that's a good case. Perfect. Okay, so for those, once again, so thank you so much for all your explanations. I think they really fill in the gaps and like paint a picture of what Bitcoin is and its value and how it can be used and where you buy it. So for those that are looking to get involved, and even for maybe the new crypto investor, now that the halving happened, which you explained for us, there are many in crypto that are saying, the price is going to go up because historically that's what's happened, or no, it's going to dump because, of the global health pandemic we can't mention, and its impact in people's, behavior in purchasing or selling their assets or, Bitcoin. So what would your advice be to those that are going to be buying Bitcoin, with the recent halving, as I said? What would your best advice be? How much should they buy and what should they expect?
Okay, so anyone who tells you that they know if the prices are going to go up or down is lying to you. So yeah, so basically the best way to deal with it is what's called dollar cost averaging. And if Jessica allows, we can put a link in the description, which is something I made, which is like it's called dollar cost averaging. And so I made a little calculator for you on a spreadsheet. And what that is like basically just so let's say that you make well, whatever you make. Let's say that you make $2,000 a month, and your rent is $800, and then you need to spend $700 on food and some entertainment, whatever. And so every month you have $500. You have $500 left over. You could save that, or you can invest it, which, as we talked about earlier, if you just keep it in cash, it's going to be worth less and less as time goes on. So it's like devaluing your savings, which is a terrible idea. So a better idea would be, I mean, you do what you want, right? Make up your own decisions. But what I suggest to my friends is dollar cost averaging, where if you have $500 a month investable income, what you can do is you can set up a way that you are going a system, so you're not affected by the price emotionally, because it's very, very, very easy to get emotionally involved, and that's when you make bad decisions, right? So like in 2017, if any of you got into Bitcoin, most likely you got in around December, when everybody, what's called FOMOing in, which is fear of missing out, when everybody just goes, shit, I better buy now because it's going crazy and blah, blah, blah. And then they do, and that's usually when there's extreme FOMO, usually there's a sharp correction that happens after that, and people, lose a bunch of money, and then they get all sad and never want to try again. So a much better way to get involved, it's called dollar cost averaging. That's when you take a systematic approach in investing or getting involved. And so if you have $500 a month, that's $125 a week. So you can either do it daily, which is, let's say you do it Monday through Friday, and so you do $25 a day, and you just every single day you just buy $25 worth of Bitcoin, and that's it, on Monday through Friday. Or you can do it once a week. So let's say on Wednesdays, whatever, you spend $125, and you don't care what the price is. You just buy it that day, and it's a really good way to average yourself into the markets. So whether it goes up or down, you don't care, because you just take the average of what, and the calculator that I provide actually gives you the average of what your buy-in price was. But a lot of studies have shown that it is a much better way to get in than trying to buy when it's low or try to time it when it's low, because it's impossible to do that. And and that's the best way to do it. So I don't suggest any certain amount. It's whatever you're comfortable with. People will tell you that you have to put in only what you're comfortable losing, which there is a possibility, I guess, that Bitcoin could go to zero one day, but I think it's highly unlikely. You'd have to remember that the network has been around for 11 years. Every hacker in the world has tried to break it, never have done that successfully, and it's too big to stop. And I mean, even the governments can't shut it down. So, and there's an extreme need and a lot of adoption happening. So I really believe that it's going to do really well. My long-term prediction is easily over $1 million for Bitcoin in the next 5 years or something. And so it's the best risk to reward ratio investment possible. And Bitcoin has been the best performing asset in the world. I think 10 out of the 11 years it's been in existence. And I don't anticipate that to slow down anytime soon.
Great, thank you. And perhaps for the more seniored or tenured investor, as yourself, when will you be buying more Bitcoin?
So almost all of my assets are already in Bitcoin. When I do get extra, when I do get payments and things like that in fiat of some sort, I usually continue to buy Bitcoin, and I do it in a dollar cost averaging way as well. I do have a bit of extra fiat on hand right now from a particular deal that we did, that I am expecting some type of market correction that's tied to the traditional markets, right? And so right now stock markets are going crazy, the underlying economy is going to hell, and it doesn't make sense. And so I do expect that there's going to be some type of severe market correction in the stock market, and because a lot of Bitcoin investors are still speculative investors. That when there is a severe correction in traditional market, I do expect a severe pullback in the crypto market as well. And so if that happens, then I will put a considerable amount in at that time. Probably anything below $7,000 if it gets there. But if not, the best way to do it is just dollar cost averaging.
Perfect. Well, thank you so much for your time today and all your explanations. Found them very, very informative. For those watching that are either new or have been in the space for a long time, we'd really appreciate hearing your commentary, or if you could leave questions specifically about any part that was unclear, or if you would like to learn more about one topic that we hit on or another. And then we would ask, and I would ask that you please subscribe, just because our goal here is going to be to provide information that is valuable in a real way, that helps you in your real life. Here at Master Ventures, as Kyle's wearing our t-shirt from the company, we incubate, we create projects, different companies that we believe in so much, and that we believe will have a huge impact on the world and changing it for the better. So once again, if you want to learn more about what these are, or have specific questions, as I said, please leave a comment, let us know what you'd like to hear more about, and we'd be happy to create specific content, catering to those questions. We'll also be creating the content in Spanish, in French, in time. So please stay tuned, and thank you so much.
Thank you.
Thank you.
Thank you. Thank you.
Thank you, Victor.
Go buy Bitcoin right now. Go buy Bitcoin. Tell me, go buy Bitcoin. Do it.
You can get him a t-shirt too.
Rupert's investment advice, not mine, but Rupert's. Go buy Bitcoin right now. Do it. Do it.